The market's trying to catch its footing here today after we had a bad CPI print yesterday. We were up earlier with the NASDAQ up close to 1%. Now we've fallen down pretty drastically. We have Bitcoin falling under $20,000 as well after holding that as support for the last 24 hours. We have some big news to take a look at. One of my top holdings just had a very bad article that came out saying that's 3x overvalued. So we're going to take a look at that, take a look at what I think. They have some points that I think are valid. Then they also have some points that I think are absolutely terrible. And I think you should take away with this and apply this to other companies, because we're going to look and see how, one article can make you feel a little bit bearish when you just read the title. But once you go through it, maybe it validates what you already thought about the company and shows that maybe the person writing it really has no idea what they're talking about. If you don't mind hitting the like button and subscribe button, I appreciate that. There is a link to moomoo underneath the video where you can get up to $2,000 worth of free stock just by depositing $100. I would highly suggest trying out the app and depositing that money at least just to get some free stocks. Now, like I said, the crypto market is down here today really drastically just in the last hour, 2 hours. And we have the overall stock market also falling here today. When we look at the DXY, we are up near 110. It has been pumping really since yesterday, cooled off a little bit yesterday, and now it's coming back up a bit. Bitcoin is also in an interesting place as well. If you look back all the way back to November, we really hit the peak back then, 69,000. Then we fell all the way until April. Then we had a little bit of a rally. We bounced off this trend line, or I actually got rejected off of this trend line. Then we've been falling, and yesterday we hit the trend line again and got rejected. So not looking too great there, especially with us falling down pretty drastically here today. Now, one good point I think was made by Tyler Winklevoss. Bitcoin is down on the news that inflation for August came in higher than expected, 8.3% versus 8.1% expected. Its properties dictate that it should be inversely correlated to inflation. It should actually be up. The fact that it is down shows just how early it is. So this is a good point. The whole point, or one of the points of buying Bitcoin, is that you can reduce inflation, right? You can combat inflation. You have a currency that can't be dictated by politicians or by economic problems. So I think that is a good point, that when we have high inflation, it gives more of a reason to hold Bitcoin. It's just the timing of it that people aren't liking right now. I think this does give people more and more reason to buy it after inflation comes down and after the Fed can stop raising rates. And that's really the problem right now, is the Fed is really increasing rates, which increases the risk-free rate of return, which is what is causing a sell-off in most of these risky assets. Now, we also have the Ethereum merge. Pay attention, it's less than 12 hours away, so it should be interesting to watch how smoothly this goes, if it affects Ethereum's price. Overall, I think it is good for crypto, but I don't know how much it will do right now because there is so much fear in the market. Now, one company that's been doing extremely well right now is Tesla. It's up 2.66% today. It's beating the market by a significant amount. It was up even more than that. It was at $305 earlier. Why is this? Well, there are a couple reasons, and then we'll get into why I'm not selling after a very bearish article. One person posted a very bearish article, and we're going to break it down. But take a look. Why would you sell off a risky company when rates are going up? Well, in my opinion, there are two reasons. One, it increases the amount of debt they'll have to pay if they have variable interest rate debt. And then it also makes it harder to get more debt. And then two, it has to do with their cash flows. Right? If there's a risk-free rate of return and that increases, then you're going to have less risky assets, most likely, right? If I could give you a 20% rate of return and you didn't have to have any risk, obviously you would put more money in that than some kind of risky stocks, or you would at least shift more money over there, right? So even with that extreme example, if we take that and dull it down to 4%, some people are willing to pull money out of riskier assets just to put them in more risk-free rates of return. Now, when you look at Tesla, though, they have about $19 billion in cash. When you look at their long-term liabilities, current liabilities, it's really not risky compared to a lot of other companies, right? They have accounts payable, which obviously won't have interest rates. They have accrued expenses. They have current portion of long-term debt, which is $1 billion. They have some other current liabilities. So really they have current portion of long-term debt is $1 billion. Their other long-term debt or long-term liabilities is very small too, right? Their long-term debt is $2 billion, so they could pay that off tomorrow, which is one of the reasons I don't think it's selling off like the general market. When we compare that to other companies like GM, right? They have a little bit more cash than Tesla, $21.5 billion. So we have finance debt current is about $31.6 billion. They also have $26 billion of accounts payable when they don't even have that much cash, right? So that's significant. They also have a lot of long-term debt. Long-term debt is $17.5 billion. Finance debt, non-current, is $62 billion. Ford has $28 billion in cash and short-term investments, $17 billion worth of current liabilities. They have finance debt of $43 billion. They have long-term debt $201 billion. They have a bunch of other debt. We're talking $100 billion plus. They have total liabilities of $201.5 billion. So Tesla's in a much better position than these other companies. And in this article, I was reading it today, exploding EV competition could send Tesla under $100. Tesla is one of my largest positions, along with Bitcoin. They say Tesla title as king of the EV hill appears to be numbered in months. By 2024, serious competition, especially on price and warranties, will likely plummet company market share. If Tesla is forced to slash prices in business, income will disappear and the stock price could suffer a dramatic decline over the next 18 to 24 months. I like reading articles from both sides, whether bullish or bearish. And one of the first things they talk about is the huge competition that's coming, right? From Chevy, GM, Ford, Nissan, all these different companies. They're talking about how low the cost is of these vehicles. So I pulled up a couple here. Let's take a look at Ford, first of all. So if you go to Ford's website and you look at their new EV Lightning, you can build your own model. It starts at $46,900. If you go back a page, it says $39,000 because they're assuming the $7,500 credit. But once you go one page further, we're looking at $47,000 to start. This is for a 230-mile model. Then you go up one to the XLT. If you want the standard range, it's $59,000. If you want anything with extended range, it goes up to $80,000. So this is pretty expensive, right? This is more expensive than the Model Y or Model 3. But let's go to a different one that's a little bit less expensive. You can look at the 2023 Bolt EV. So that, after you get done with it, actually is pretty cheap. It's $27,000. However, it goes 0 to 60 in 6.8 seconds. So not very fast. Now, those aren't terrible points against these cars, but everything has their own place, right? Tesla is a performance model. Now, something else that they talk about is just the fact that they're going to have to lower their costs, right? Or lower their vehicle price because of all this new competition. First of all, I don't think the competition is going to be able to scale. They're not as efficient. They aren't able to source the materials as cheaply. They aren't doing the same volume for the most part as Tesla. BYD is the only one that does more electric vehicles. So they won't be able to scale. They won't be able to make them as cheaply. They're having a hard time going over to EV after their traditional vehicles, and they really don't want to. They're just kind of being forced to by the government and by just the fact that the market is transitioning over to EVs. Tesla is expensive because of the fact that they have so much demand. They still have a backlog of vehicles. When that backlog comes down, they're not going to have their cost as high. They're not going to charge as much for a vehicle. That will cut into their margin, but it will also make them more accessible to more people. So they will be able to sell more vehicles. They're also pretty darn close to their autopilot or full self-driving, I should say. Their full self-driving is going to cost $15,000. That is an upsell that none of the other vehicle manufacturers have. Now, they also talk about how other companies are working on that, whether it's Apple working on their vehicle by 2025. They're a software company. They're not going to want to build a huge new kind of business like this. I wouldn't be surprised if they worked with someone else, but I don't think they're going to build their own vehicle. And they're still talking about 2025. They've been doing this for years and have not gotten close to it. Then they also talked about Waymo and Google working together since 2014 and how they're definitely going to be hitting the streets in the not too distant future with their futuristic technology. So any kind of other technology that's full self-driving isn't as adaptable as Tesla. They're not able to just place them anywhere and have them actually work. They're built for specific areas, and everyone is far behind Tesla in that way. So in my opinion, they can keep the price high for their Teslas until there's more competition, or just until their backlog falls down and their production matches it. Then they'll lower their rates, but they still have so many other features that they can add that can increase their revenue. I don't think they're going to have a hard time, and they already have much better gross margin. They already have much better growth than all these other companies. So when we go over to their final thoughts, they think that the price could fall under $100 over the next 18 to 24 months. They talk about all the new EV options out there and available. However, I think a lot of people still don't understand that more options doesn't necessarily mean that that's good for the companies. Like, for example, if you go to GM or Ford, they offer so many different vehicles, different models. That's not actually good for the company. It gives people more options, but it actually reduces the efficiency. Whether it's different bodies that they have to work on, different materials, different product teams, it's really inefficient to have all these different options. Do you think they could sell the same amount or close to the same amount of Fords if they didn't have 40 different pickup models, right? So that's just one opinion, or that's just one point on this. Yes, there will be more EVs coming too, and Tesla's market share will fall just because there are other people there. But the overall market will be growing so quickly, and it will be taking away from the ICE vehicles. So yes, Ford or GM might be getting more of the electric vehicle market, but they're also going to be losing a lot of money in the ICE market that is not growing. And they're still selling vehicles there. They're losing sales on that end and gaining some in the EV market, right? If you own 100% of the EV market, let's say I am the only one that makes marshmallows here in my city, and I make 1,000 a year, and then all of a sudden the next year I make 10,000. But there's one other company that makes 2. I lost market share. I lost percentage over the market. However, I still grew sales by a huge amount, right? That's kind of how I view it with Tesla. Now, going back to this article, right? This person has made articles on Tesla before. He actually made an article on Tesla several years ago. He said back then that now might be a great time to sell or short the stock. And he says this for several reasons. Tesla as a business is going to sharply lower their expected car sales soon. This is back in 2020, right? A lot of people worried about a coming recession. He lists the greater fool theory. It could continue to favor this wildly bullish momentum. He also talks about how he doesn't like Amazon. He thinks that this low volume or high volume, low margin business is a historically horrible retail idea, which is interesting because that's essentially what a lot of these other vehicle manufacturers are going to be, right? They're going to try to sell a lot of vehicles. They're going to have low margins because they're inefficient. But yet, I just find it funny he doesn't like Tesla because they are able to sell to a higher market, a more wealthy market, and get much higher margin, right? They're not going to have a hard time selling to people if we go through a recession, unless it's a terrible, terrible recession. People will still want Teslas because these are the people that make 6 figures a year and probably won't be as affected. And also, I just think it's funny that he's talking about Amazon because he doesn't even note or think about their business, their cloud business, which is so darn profitable and is growing like crazy in the background. They aren't showing profitability because they don't want to. They keep on reinvesting in themselves. And a lot of their businesses are high margin. It's just that they continue their retail business. They also continue their media business and some other businesses that aren't necessarily as profitable as advertising and the cloud business. So overall, I am not selling my Tesla position, right? It's just interesting. I want to cover this because this person obviously does not like Tesla. I think it's very old-fashioned thinking. Now, this person actually is rated pretty high on tip ranks. He is considered to be a pretty good analyst, but he still notes that Tesla can't compete on price. However, Tesla has been able to decrease the price of their cars from $84,000 to $36,000 over the last 5 years. Now, they are selling less expensive cars now than they used to, right? So the cost would be a little bit higher if they were selling the same types of vehicles, but a lot of it is just due to the fact that Tesla has been able to ramp so well. So I think they're going to continue to be able to do that in the future. This is just a good point to not necessarily sell anything just because you're worried, right? We could still fall down for Tesla or any stock because the 10-year treasury is going up, even though they have low debt and some of these companies have low debt. The fact is, people are just going risk off. They're either getting just really worried or they're just seeing that there are safer options that provide what they say a risk-free return. So just keep that in mind. But overall, I think that now is a good time to be watching the markets, picking up deals when you can, trying to continue to increase your positions in good quality companies. But just keep in mind, we could fall a lot further. So I'm dollar cost averaging slowly. I've been consistent throughout the whole year with my buys. I'm going to continue to do that going forward. Don't forget to check out the link to moomoo to get up to $2,000 for free just by depositing $100, and I'll see you in the next one. Bye.